Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Gold and silver shine during times of economic turmoil. Right now we see stock markets crashing, a recession around the corner. Things are very extreme right now. Everything is on the front burner. So I'm going to be sharing an article talking about the effect of a stock market collapse on gold and silver so we can invest more carefully and also more successfully. Right now we see gold and silver in the green. Gold at $1,645 and we see silver at $14.69. So markets are pretty stable right now, but that does not mean things cannot flip very quickly. So with that said, make sure to smash that like button. Make sure you subscribe because I do post daily videos. So the link to this article from goldsilver.com will be in the description. So many investors hold gold and silver to hedge against various economic crises. But does this hedge hold up during stock market crashes? Knowing what effect a market plunge and subsequent dollar collapse will have on silver and gold is vital to making investment decisions now and then deciding what course to take should a major recession or depression occur. It's common assumption that gold and silver prices will fall right along with the market. And if that's the case, wouldn't it be better to wait and buy them until after the dust settles? But suppose that the investors have it right and their precious metals do retain their value, or even give value. During a depression, it's better to hold gold or silver. In other words, which one is going to give you the best chance of weathering the storm? Before formulating a strategy, let's first look at the price data from the past stock market crashes and see what it can tell us that might influence investments decisions. So let's go back in history because that's the best way to look at it. So to help answer the questions posed above, I look at the past stock market crashes and measure gold and silver's performance during each of them to see if there are any historical tendencies. The following table shows the 8 biggest declines in the S&P 500 since 1976 and how gold and silver prices responded to each. So, note, green signifies the value rose when the S&P crashed. Red means it fell more than the S&P, and the yellow denotes that it fell less or the same as the S&P. So, gold and silver, you can see gold does very well. Silver doesn't all the time. So this is because gold is more of a safe haven. And it even says in most cases, gold price rose during the biggest stock market crashes. But we're looking at the bigger picture than this. We're not looking at to be investing during these times. We're talking about afterwards. Because afterwards, in 2011, we see $50 silver. So yes, it's yellow right here. But then we see a huge, massive spike in silver prices. So there needs to be more context before you just say that silver's a bad investment during these times. During these times, silver's more volatile, which means it hits lower lows, but then afterwards, once things play out, that's when silver definitely can capitalize. So does gold go up if stock plunge occurs? In recent times, the answer has usually been yes. Notice this was regardless of whether the crash was short-lived or stretched over a couple years. So number 2, investors shouldn't panic over an initial drop in gold prices. You recall that gold did fall in the initial stock of the 2008 financial crisis. This also led to $50 silver. This recent memorable instance is perhaps why many investors think gold will drop when the stock market does. But while the S&P continued to decline, gold rebounded and ended up 5.5% up on the year. Over the total 18-month stock market sell-off, gold rose more than 25%. So number 3. Gold's only significant sell-off, 46% in the early 1980s, occurred just after the biggest bull market in modern history. And that's also when we saw $50 silver again. Gold rose more than 2,300% from its low in 1970 to the 1980 peak. So it isn't terribly surprising that it fell with a broader stock market at the point. In recent years, the situation has been the exact opposite. Gold endured a 45% decline from its 2011 peak to this 2016 low, which was one of the worst bear markets in modern history. At the same time, this isn't entirely a shock either, given its quick gains during the 2008 crisis and 2011 crash. So number 4. Silver did not fare so well during stock market crashes. In fact, it rose in only one of the S&P sell-offs. and was basically flat in another one. This is likely due to silver's high industrial use, about 56% of the total supply, and that stock market sell-offs are usually associated with poor or deteriorating economies. However, you'll see that silver fell less in the S&P, but in one crash. This is significant because silver's high volatility would normally cause it to fall more. Also notice silver's biggest rise, 15% in the 1970s, took place amidst its biggest bull market in history. It also ended flat by the end of the financial crisis in early 2009, which was its second biggest bull market. In other words, we have a historical precedence that silver could do well in stock market crashes if it's already a bull market. Otherwise, it could struggle. So, the overall message from this history is the odds are high that gold won't fall during stock market crashes, and in fact, it will likely rise instead. Silver might depend on whether it's in a bull market. So why does gold behave this way? Gold's yin to the stock market yang. So the reasons gold tends to be resilient during stock market crashes is that the two are negatively correlated. In other words, when one goes up, the other tends to go down. And we've seen this regardless if it's a crash or not. Gold and silver, or gold and stock markets, or silver and stock markets, have this ping pong battle going on. When stock markets are up, gold and silver goes down. When gold and silver is up, stock markets go down. So this makes sense when you think about it. Stocks benefit from economic growth and stability, while gold benefits from economic distress and crisis. If the stock market falls, fear is usually high, and investors typically seek out safe haven gold. If stocks are rocking and rolling, the perceived need for gold from mainstream investors is low. So you can kind of see how gold capitalizes off of economic turmoil. Stocks benefit if the economy is healthy, so you can see why that is. Historical data backs up the theory of negative correlation between gold and stocks. This chart shows the correlation of gold to other common asset classes. The zero line means gold does the opposite of that investment half of the time. If the line is below zero, gold moves in opposite directions of the investment more than with it. If it's above zero, it moves with that investment more against it. So you can see, on average, when the stock market crashes, U.S. equities on the chart, gold has historically risen more than declined. Gold has also historically outperformed the crash, or the cash sitting in your bank account, or money market fund. Even real estate values following gold only a little more than half the time. This is the practical conclusion for investors. If you want an asset that will rise in most other assets, gold is likely to do that more often than not. Doesn't mean that gold will automatically rise with every downtick in the stock market. In the biggest crashes, though, history says gold's more likely to be sought as a safe haven. And this is the thing, is silver still has much more potential and opportunity than gold, especially with the gold to silver ratio sitting at 112 to 1. This means that silver more than likely is going to be outperforming gold sooner than later. Also, silver is highly beneficial in the industry, especially with 5G coming out and the EVs, electric vehicles. It looks like silver demand is going to be rocking, and something that people really need, especially from a technological and industrial use. So it's not like gold is the better investment all the time. Silver definitely has its place, and I think people need to see that, and they will see that sooner than later. So there's one possibility we have to consider. What if the stock market doesn't crash? It's not always easy to predict if stocks will fall off a cliff. So what if they don't? Or what if the market is just flat for a long period? You might think that's unlikely given the number of risks inherent in our economic, financial, and monetary system today. But look at the 1970s. It had 3 recessions, an oil embargo, interest rates hit 20%, and the Soviet invasion of Afghanistan. Here's how the S&P performed along with gold performed. So you can see that gold skyrocketed and S&P is basically flat. The S&P basically went nowhere during the entire decade of the 1970s, and after 10 years it was up measly 14.3%. So in other words, gold's biggest bull market in modern history occurred while stocks were essentially flat. That's because the catalysts for higher gold were unrelated to stock markets. They were more about economic and inflationary issues occurring at the time. So anything can happen when markets are hit with extraordinary volatility. But regardless of what stocks might do, it's wise to be without a meaningful amount of physical gold and silver in light of all the risks we face today. I don't think so. So I definitely think that gold and silver are the perfect investment for many reasons. I'm glad that I found this article, and I'm glad that people were able to or this article was able to share historically what people do and how they invest, whether the economy's in a great shape and the economy's in a bad shape, what the markets do compared to stocks, because that is all very, very relevant, especially what's happening today. We can apply the same factors that we learned in this video to what's happening today and see that gold and silver should be very bullish. So anyways, I hope you enjoyed this video. If you did, make sure to smash the like button. Also, make sure you subscribe if you're new, because I do post daily videos. A link to this article from goldsilver.com will be in the description. Make sure to smash that like button. Subscribe if you're new, because I post daily videos. This is Silver Slayer. I'll see you guys soon. Peace.